Welcome to the Collective Genius Podcast, the show for real estate investors who are looking to scale.
All right, welcome back into the Collective Genius Podcast, the podcast for real estate investors that are looking to grow and scale their business. I am your host. I am Leon Barnes, and today I've got another treat for you. Again, we have another longtime Collective Genius member, and for the second week in a row, maybe even the third week in a row, we have a Collective Genius CEO member, our highest tier of our community, Mr. Ken Majmudar. Welcome, Ken. How are you?
I'm great, Leon. Thank you for having me.
It's good to see you. I know that you just recently got off of a plane from Argentina, and for our members that don't know you, they're in for a treat because you are not the traditional CG member or the traditional avatar that joins this community. So we've got a lot I want to talk about from your journey, but let's start there. I want to talk about your background, but why Argentina? What were you doing down there?
So I don't know if most people are following, but I started following it probably about 7-8 months ago. Argentina, obviously South America, below Brazil, large country. I didn't know this exactly. Like I couldn't have told you the exact statistics, but I can now. So Argentina has about 47 million people. Brazil, which is the largest country in South America by population especially, is over 200 million people. So Argentina is like 1/4 the size. But there's a guy down there who got elected president in December of 2023. His name is Javier Milei. Folks that are paying attention, Trump obviously just got inaugurated. So we're talking, it's just a few days after the inauguration of Trump's second term. Milei was there at the inauguration. Trump and Milei are close. Milei was the first leader that Trump had visit him in Mar-a-Lago after he won the election. But he's an extraordinary guy. And what Argentina has a long history of, obviously as a country, but at one point Argentina was very rich and successful. And then through decades and decades and decades of either authoritarian rule or basically socialist type political parties, the country really dropped a lot in terms of its success economically. And just out of the blue, sort of, this guy Milei, who was an economics professor, got elected to be president. And what really caught my attention was that in his first few months, he did more than I thought would be possible in an entire 4 years. He just went like the speed of light. And I started paying attention. I was so impressed. And he had given a TED Talk in 2018, TEDx Talk, actually, to be more accurate, where he talked about his journey and what he believed economically made sense. And it was really the best. I would highly recommend it to everyone. But he was basically indicting collectivist philosophies, including socialism, and was unabashedly defending capitalism and market-based systems as the best possible system that one could have in multiple different ways, including at the end, he said, aesthetically, it's better. Look at Cuba and look at New York City. Look at the skylines.
Right.
And it just really caught my attention because I think he was so crystal clear about what he believed. But I happen to believe that he's right about what he believed also. And so to have a guy like that become president of a country is just, I would have thought impossible. But, and then seeing what he's doing, I had to get down there to study it myself and learn more.
Learn more because of possible investment opportunities in the future?
Absolutely. Yes.
Yeah.
So there's, unlike probably most of the people, maybe everybody that you talk to, I'm quite active in public securities. So traded stocks and bonds and things like that. Argentina has about 15 to 20 companies that are traded as ADRs. So they trade in the US, but they're Argentina companies, and they're also listed in Argentina generally. So it's not a lot of companies. There's some ETFs also, exchange traded funds that one can invest in. But like I do like fundamental research. So I like to know the companies. I like to know the situation and stuff. So the most compressed way to do that is to go somewhere and basically meet companies. And I actually also got to go to their version of the White House. It's called the Casa Rosada. I met also the guy that ran against Milei and lost, a guy named Massa. I met some of the people in the political opposition, because one of the worries is that, hey, like we've seen this movie before, where things have reformed and then they go backwards. And so investors were worried about that. And so there's a firm basically down there that invited me to come to one of their investment conferences, and they put a 3-day conference together, and I met with like 10, 12 companies. Plus I got to meet, all these influential people.
So I wanted to start with that story to set up your introduction and your journey, because it is not, as I mentioned before, it is not one that we normally see as our base avatar for this community, especially, almost 6 years ago when you joined this community. So let's start with, we started with the story. Now tell people what it is that you do primarily, because it's not first real estate investing. It's public securities, as you mentioned before.
Yeah.
So let's start with where you're based out of and what it is that you do as your primary focus on a day-to-day basis.
Sure. So I reside currently in Pennsylvania, but my whole life I was in New Jersey. And so I'm really a New Jersey, New York City guy. By in terms of being an immigrant also. So I'm born in India, actually, and I was 5 years old when my parents moved originally to Jersey City, New Jersey, which for those who don't know the New York City area, it's literally across the Hudson River from New York City. So actually, I would say the best views of New York City are probably from Jersey City or Hoboken. So they're on the New Jersey sky there,
right?
You're seeing one of the great cities, one of the great skylines in the world. From a few miles away. So that's where I grew up, in sort of in New York City, greater New York City, and in the shadow of Manhattan. And my parents both worked in New York City, so they would commute from New Jersey when I was growing up, going to school and so forth. And then so I went to Catholic schools because my parents felt that the education compared to the public schools, Jersey City is pretty urban. So I ended up going to Catholic schools, parochial schools, and then Jesuit high school. The Jesuits are known as educators, among other things. And then I was fortunate that I got to go to an Ivy League college called Columbia University, which happens to be in the city of New York. And I studied computer science and minored in sort of economics and finance. And then I went to Harvard Law School and I got a law degree. And from Harvard Law School, I got you have to take an exam, which I'm sure most people know. It's called the bar exam if you want to be an attorney. So I took the bar exam, got my sort of credentials to practice law. But at the same time, I had realized that I'm more interested in business and finance. So my first job out was not in the law. It was in investment banking. So for 7 years.
It's very common for Harvard law grads or Ivy League grads in general to end up there, correct?
I'd say it's definitely, it depends on what perspective you look at it. So if you look at the investment banks, most of their people are from these type of top schools. But if you look at the people graduating the top schools, a lot of them do a lot of things, including investment banking. They also do management consulting. They also go into companies. They also go into academia and many other things. So from Harvard Law School, I'd say like my year, there's about 500 graduates each year, 540, I think, when I went. So out of that group of 540, I'd say there was probably 8 or 9 of us that actually went directly to an investment bank. And out of those 8 or 9, probably at least half or 2/3 of them had worked in an investment bank before coming to Harvard Law School. I was one of the few that had not done that. I came straight from undergrad. But then what happens is, like, if you fast forward 5 years out or 10 years out of those 540, I would say more than 100, probably even 150. So a good 25% of the class or more are fully business people. They're not practicing law. So in that sense, yes, you're right.
It's not, what I meant is that the investment banking industry as a whole targets very intelligent people, and typically Ivy League is where they get a lot of their, the Ivy League graduates is where they get a lot of their people.
Yeah, that is true.
Including you.
That is true. Yes.
Yeah.
That is true. Now, I don't, obviously, like, there's many things in life where you go through these different selection processes, right? So, like, when you're in 5th grade, you take whatever the standardized exam is, and then you go to 8th grade and you do it again, and you do it in high school. And so it's like life is this constant process of like filtering and selecting, and then, but there's also randomness involved, right? Like in terms of like you meet somebody and they say, hey, I'm doing this, and that might inspire you to kind of go do it or apply to a job, or they say, hey, my company's hiring, and you might end up like saying, well, okay, cool, like I'm looking for a job, and you give them your resume, and next thing you know, you spend the next 30 years in that one field, and it wasn't like something you chose specifically. So there's a mix of chance in life, and there's also a mix of kind of, screening and ability and many other factors, I think.
I'm a walking testament to that myself. Is that how you ended up doing your own investment banking, financial advising, public security? Is that how you ended up opening your own?
In a way, like, so I did the thing for 7 years, but investment banking is a little different than investment management. They're both part of finance, of course. But investment banking is typically you work for large corporations, and you're helping them to do mergers and acquisitions and or corporate finance. So obviously these big companies that are worth billions and billions of dollars, from time to time, they need to raise more capital. It could be equity, it could be debt. So they typically work with their investment bankers. There's probably in the United States, there's, at the time when I joined, there were 6 major firms and let's say a dozen sort of second level firms, and then even more sort of boutiques. And so different, depending on the size of the company and what they're trying to accomplish, they will work with one or more of them actually to help them raise capital, to help them just do any number of different things that a large business needs to do.
So you leave that after 7 years. Is that when you started your own?
Yes.
Your own.
And that was 2002. So I've already been doing this more than 22 years.
Okay.
Yeah.
Where did, let me go back for a second. We'll transition back into how real estate came into play.
Yeah.
I know the story, but I think it's fascinating, again, for those that are traditional real estate investors to see a non-traditional route. Let's go back, though. You obviously, your family immigrated here. You got an opportunity to go to the best schools. My goodness, 2 different Ivy League schools. What did it, I mean, I'm sure your parents wanted you to be one thing, and maybe did you align with that, or did you have goals of doing something else when you were younger? Like, I want to do this, but your parents wanted you to do that.
No, so I'm fortunate. I think many times, especially in immigrant communities, I have heard stories of where, like, parents want you to be a doctor or whatever, or some specific engineer, whatever the case may be.
Right.
And my parents were much more, I guess, supportive and open, in the sense they didn't have like a very rigorous frame that, like success means X. But on the other hand, they always had a frame of like unconditional support, which obviously as a child is very, very fortunate. But also the idea that, hey, what we want is just that, there's values we think are better, and there's like kind of like education is important, and doing well in school is important. So it was more so like, the expectation was to perform well in whatever you do, and to put your effort into whatever you do and do your best. But it wasn't like, okay, and therefore also, there's these other 5 things that we expect. It was just those basic things. And then there was a faith or a trust that, that if you do those things that you would find the things that, kind of fit you or make sense for you.
And interest you, right?
Yeah.
That's always the case for, like you said, there's an element of chance there. And sometimes people end up in things that, they don't necessarily love. They just ended up being really good at it. And so for you, are you living what you thought you would want it to do when you were, high school age and beyond?
Yeah, I think so. I mean, I didn't have like a clear picture, as you can imagine, right? You're just trying to kind of like, be accepted by your peers. And maybe in my case, like I wanted to do well in school. I got involved in certain activities like extemporaneous speaking, and I was in the math club and the computer club and the chess club. I mean, obviously I was like a massive nerd. Like, those are my activities, right? Math club, computer club, chess club, and public speaking / debate. Like these are my extracurriculars, right?
Yeah.
So I mean, but these were the things I was pulled to. Nobody told me, that I should or shouldn't be interested in XYZ. And it served me okay. And there was a lot of things I can look back on, like even the fact that I went to Columbia, which is an Ivy League school. Like, I applied to a bunch of Ivy League schools that I did not get into. And I didn't know about Columbia, and a friend of mine that sat behind me, not even a close friend, sort of like almost like an acquaintance friend, just by chance had a conversation with me, and he's like, "Where are you applying?" And I told him, and then he goes like, "What about Columbia?" And I was like, "Well, I never really heard of it. What is it?" And it's an Ivy League school, a great school, but I just forever.
Because it's in New York.
And it's in New York, yeah. But like, I mean, I'd maybe like heard of it, but I didn't really know much about it. I probably wouldn't necessarily have known to apply. But and here's like the reasons that I applied to different schools. Like I applied to Harvard. That one I knew, right? Like that one was like a sort of like world famous. My parents always knew, whatever. I applied to Princeton because like Brooke Shields was going there. I applied to Brown because Kennedy Jr. was there, and I'd read about him, and I'd heard it was a good school. I mean, I didn't know about Yale. I never applied to Yale, as an example. I didn't even know about Yale until my first year of Columbia, where I actually ran into Yale people, and they were shocked. Like they were like, "We're from Yale," and I'm like, "Where?" And they were like,
I mean,
and I heard, "Where is that?" And they were like, "What the hell? This guy doesn't know Yale."
Yeah, you heard of the Brooke Shields going to that school, and you heard of Kennedy. You didn't hear of the Bush family going to Yale?
I did not. So we're talking like mid 80s.
Yeah, so that would have been, well, George was vice president in the 80s.
Yeah, he was, but I didn't, I knew Reagan. I didn't pay attention to George.
You didn't know.
Bush. It's,
I mean, these are all great reasons to apply.
I'm like, I'm a 16-year-old. Like, I don't know anything, really. I know things like my world is my high school and my parents, and my sister, and it's very close to that. And it's like whatever I see on television. There was no internet, right? So the way you get information is you hear about it, you watch the national news, which I didn't really watch the national news too much, but I used to watch the nightly business report, which probably gives you a clue as to like my interests. When I was 15, 16, 17, I'm watching the nightly business report on my own because I'm interested. I'm fascinated, actually.
There's your passion. Like you knew early on, like a lot of, people that I've talked to, there's a lot of former athletes that were very passionate about sports. You were very passionate about business early on. And it surprised me where you ended up with your education and where you ended up today. You're very curious. Like that I love our conversations that we have because you're always curious to learn more, especially where there's opportunity. Hence the reason I started with the Argentina story, because it says a lot about you. It's like you look for opportunities no different than a Warren Buffett. You're looking for opportunities that may allow you to invest with, your own research that makes sense for you to continue to not only grow your own business, but your client's business as well. And I think that, when thinking about all of your interests back then, you used the word nerd, not me, but in the 70s and 80s,
said it if the shoe fits,
Yes. But, here's the difference, man. when we were growing up, 80s, early 90s, nerds were looked down upon. Now nerds run the world. Like the Bill Gates of the world, Jeff Bezos of the world, I'm sure got made fun of a lot. But
Definitely.
thanks.
It would have been nice to know that back then when I was, trying to get the girl and, it wasn't working too good. But hey, I'm glad it went this way anyway. Definitely works to our advantage.
Most nerds did okay. Right, if they were nerds in the 80s, most of them did very well. And most of them are still doing very well. And so let's transition back. So you had a lot of interest. Most of those were business. You've now opened up your own business. You are, doing investment management. Clearly, you have the research mind to find opportunities. So what led to real estate? You have public securities. And then you start investing in real estate, which honestly, most people that I've known in the past that do any type of financial or investment management, typically real estate is not a strategy. It's mostly, the stock market and things of that, and funds and things of that nature. When did you make that? All right, this is an opportunity here that I need to make sure not only I'm taking advantage of, but also my clients.
And I go back to what you said earlier, which is true, which is you said, hey, I always struck you as always curious. That's not new. Like if you met me when I was 4 or 5 or 6, and still all the way through to till today, I was always that way, always asking questions. Actually, I remember many times like asking my parents questions about things, and I would just ask question after question, because I'm trying to make like some kind of model in my head of like, how do things really work? And so I'd be asking questions to try to fill in this like void in my brain, if that makes any sense. Like say there's something out there and I don't understand it. And it's just this like blob of like, kind of confusion. And so every time I ask a question, a little piece of the picture, gets, how you like the pixels get a little bit clearer.
Yeah.
And if you ask enough questions, like you start getting a picture emerges, right? Yeah. And so that was always what my brain, like, or what I was interested in, like to just understand things like in all different areas. And then even as a young person, I realized like everything seems to be related to everything else in some way, sometimes much deeper, sometimes shallower. So that's always interested me. And that's why I've always been interested in real estate. I've always been interested in businesses. I've always been interested in like how the world works. But I started with stocks because, I was working in finance. I kind of understood that you can basically buy these things and they give you a share of a lot of businesses that are iconic, very successful and great companies that trade in the market. And so I wanted to understand, like, well, how do you do that? Because I knew that essentially it's investing in general is the super high leverage thing. So obviously the highest leverage thing is education and knowledge, right? And then investing in yourself is kind of a version of that. But after that, the next thing that gives you leverage in life is to own assets that basically give you income and growth of wealth without you having to bust your butt. And so basically I understood early on, which I think a lot of people don't sort of ever really focus on it, which is, hey, you get educated, you get some kind of work, and then you get paid, and you try to save as much of that as you can and buy assets. So essentially this, that book, Rich Dad, Poor Dad, is basically saying rich dad knew this, poor dad didn't.
Right.
And it seems like a lot of people, so those concepts the things I'm saying now, I did read that book, but much later, but I already kind of intuitively understood that. Now my culture understands that. I'm from a part of India where a lot of people are business people. They're called the Gujaratis. They go all over the world and buy and own businesses or start them. They're very successful. They're savers. So my parents were that also. And that's kind of some of what was in my cultural background that I just picked up on at very young. But yeah, so I was always interested in real estate. I mean, in fact, Indian people were much more obsessed with gold and real estate than they were with stocks until, I think, even today, like gold and real estate. But, like obviously when the market has done as well as it has, they start catching on. But so that's always been in the backdrop. And then I took classes on real estate development and on real estate investing. I took classes at undergrad and also in grad school on many different parts of finance and legal and whatever. So I started understanding more and more. Then you start working, you start understanding more and more. But I focused on the stock market because that's where I saw an opportunity and where the access was there. And it was really, and then I invested personally in real estate multiple times, and I always did well in it. But I didn't do it like commercially. So I would say it was it was roughly 10 years in to having founded Ridgewood. Now, I was already investing in real estate successfully through the stock market. So that's an important point to make, is that there's hundreds of companies in the stock market called REITs, real estate investment trusts, REIT. That was started by legislation in the 70s, where basically they said, we're going to create this type of company where most companies have to pay tax on what they make. But they created these REITs where they said, REITs, you don't have to pay tax at the company level. So whatever you earn, you can distribute out to your investors, and they pay tax on what they get. So they're basically not having two levels of tax in that type of company. Whereas, for example, if you have a company like Google that makes a lot of money, Google pays tax. And then if they give you a dividend, you pay tax on that dividend. That's a second level of tax. So in order to essentially encourage real estate to be securitized and owned more broadly, Congress created the REIT law decades ago. And from that point, hundreds of companies, iconic real estate is owned through these REITs. Some of the best real estate in the country is actually owned by these public companies. So I was investing in those just as a part of what I was doing. But what ended up happening is the market did well. The REITs were paying low dividends comparatively. And bonds were really interest rates, if you remember. And, they've gone up recently, but basically there was a long period there, like more than 10 years, where interest rates were super low. And if you had money to invest in cash, you would not earn much of a yield at all. So traditionally, people would say, oh, well, I'll put X amount of money in stocks and I'll put X amount into cash or income instruments and earn yield to live on. And when that opportunity sort of disappeared on behalf of myself and my clients, I was thinking, well, where can I find yield to replace the kind of income component of these portfolios? And I said real estate. But then even the publicly traded real estate still looked a little more like stocks, and the yields weren't that great. So that's what led me to, why not do direct real estate? And so that's what I did.
Now, that's a lot easier said than done. You were investing in the REITs, but to go direct, that's a different animal. So How did you start?
So a couple of things. Like one is because of my interest in real estate, I do know real estate. Like I know how it works. I know the lingo. I know the cap rates. I know how to finance things, and like not at the super detail level, but like conceptually, I'm very familiar with it. So in that sense, I'm between my education, my experience, and my interests, I'm not the typical investment person in my ability to handle things that are complicated.
I would agree with that.
Yeah,
Hence the
right.
we had
So that helps, obviously. But at the same time, I'm like, look, it is a full-time thing to do real estate. So what I essentially did was I looked for operating partners, folks who are focusing 100% on real estate, who are looking for capital partners. And that is how I got into commercial real estate on behalf of my clients. So what I would do is I would organize, I would first of all create a relationship with an operating person who has experience doing commercial real estate. And typically, most of it was multifamily, but I did do some retail and I did do some office in the beginning, particularly. And so my criteria is basically I look at the people first, and then I look at the project, and then I look at the structure. And so that's the frame through which I would evaluate people I could do business with and deals that I could potentially get involved with. And then when I found one that I liked, I went to my clients and I said, hey, well, here's this issue, which is we can't generate yield the normal ways. And I feel like real estate is a way we could solve that issue, that need. And so this is how I've created essentially like an SPV to invest in this one with this particular operating partner. Do you want to do this with me and my other clients? And then enough people said yes, so we did it. And we had obviously some good success doing that.
So I want to take this opportunity to not gloss over what you said there before, is you're investing in the people first, project second,
right.
Structure third.
Right.
As an investor, that are real estate investors that want to continue to grow their investment relationships, especially from a private money standpoint, whether that's single family, multifamily, self-storage, apartment build, it doesn't matter. Tell me how when you're looking at the people, how are you evaluating an investor, a real estate investor, and to make that first level of your criteria? Like, how are you evaluating that individual?
It's qualitative mostly. It's getting to know people. There's this saying which I believe actually just someone in my LinkedIn or social network posted this recently, and I wholeheartedly agree. He said, "It's almost impossible to do a good deal with a bad person." And I absolutely believe that. And maybe a few times I've maybe mistakenly violated that rule without obviously intending to. And it's often true, So, and then the corresponding is also true. It is often hard to do a bad deal with a great person. Yeah. And I've also had that experience multiple times. So it was intuitive to me, like this is not something I necessarily learned, but I keep relearning anyway through experience. Mm. So it was always made sense to me that, hey, you just want to find the best people to do business with. And to me, that what I mean by that is, first it starts as like, is this person a good person? And what's a good person? Good values, good intentions. That usually manifests itself in track record, how people view them, how they treat others, et cetera, et cetera. So, like then there's this second corollary is like success leaves clues. So typically if I think a person's good, they have some track record of success and being good. So obviously that's factored in. But I talk to them and I try to understand what they're like and how they think. And of course, everybody can seem great when everything's great, right? So in fact, there's this. So my dad, he's definitely a believer in like mindset and positive thinking, and my mom too. And so that was obviously, I think that was been a big part of my upbringing and success, for which I have to just thank them because it's just good luck, right? But he used to have a little plaque on the wall of our first, actually every house. I think he probably still has it, though I haven't seen it recently. And it said on it, "It's easy enough to be pleasant when life goes by like a song, but the man worthwhile is the man with a smile when everything goes dead wrong." I would read this thing like multiple times a day.
Clear.
And absolutely, because it was just like right there from the kitchen wall. Like every time you pass by, you're reading the thing, and I really believe it. And so when going back to our conversation of people, like I want the people that when everything goes dead wrong, they're still going to approach it with integrity and do their best. I try to be that type of person. And that's how you build credit. I think a lot of people don't understand. Credit is the byproduct of that. You can't fake it. I mean, you could fake it maybe a few times, but then it'll collapse. So the way you get credit is by following through on your promises and your commitments. And that's what I look for. I look for people that I think are like that or would be like that. And obviously you can never be 100%, but you look for clues. And most of it is just talking to them. I can usually pick up within a minute or two.
Really? A minute?
I think so. Yeah, it's pretty intuitive. I mean, I'm saying it's not 100%, but I'd say I'm probably within a minute or two, I can probably size somebody up and be like maybe 80% right or 70% right. And then obviously, like, I don't stop there. I keep.
You do your research because you're curious.
Well, because I'm curious and because I can still get it wrong 20 or 30% of the time if I just go by gut.
Right.
So obviously, like, that's not fair to people if that's all you do. But, I'd say I'd be 70, 80% right within 2 minutes of talking to someone. Now, I'm looking for integrity and honesty and like commitment and values and all those things. And then I'm also looking for ability, right? Like, is somebody exceptional, smart, hardworking, like, exceptional qualities, right? Because exceptional things are exceptional. They're not common.
I didn't want to gloss over that because, if people are listening to this and they're real estate investors, they're obviously wanting to grow and scale, not only their businesses, but as human beings as well. And when you're scaling, access to capital is crucial on all levels: institutional capital, private capital, bank capital. It's all super important. And I have yet to find anyone that does well raising private funds that those investors weren't investing in the person and the human being first. And I think sometimes we get so lost in, I've got a great deal. And that's your second criteria. And I think that would land true with most real estate investors or most people that are investing in anything. They're investing in the person first.
Right. Yeah. It's true in the stock market. It's true in real estate. It's true in venture capital. It's true in a lot of things.
Yeah. Give me that one deal when you first started with your clients getting into real estate, the biggest lesson. Like, I'm sure there are several, but one of those lessons where you like nitpick and helped you get to this point where it's 1, 2, 3 person, project, structure.
Uh-huh.
Give me that lesson that you learned early on that would be beneficial to the listeners.
Well, I think one thing I knew that I think a lot of people don't seem to pay enough attention to, particularly in real estate, is, actually, I would say 2 things, and they're kind of related. So one is real estate is cyclical. And we've been through, until very recently, it's been like a long bull market in real estate. And it's cyclical partly because it's related to interest rates. So when interest rates go down, real estate is doing better. When interest rates go up, it's a little more challenging. And the second thing is leverage is dangerous. Like, the more leverage you use, the more chance you have of, having issues when cycles turn down. So I think those 2 things were things I already knew, just from my long history of understanding, investment cycles and investment in general. But like in real estate, the asset itself, except for when interest rates are going down, like, the returns are not massive generally. Now, obviously, in CG, part of the general system that people follow, which is wholeheartedly an excellent way to do things, is try to buy assets at significant discounts, right, from motivated sellers. That's, of course, a great way to mitigate risk. But nevertheless, most real estate involves quite a bit of leverage, and many times in every market, people sort of conflate their own skill with market. When the wind is at their back, people feel very smart, and so often that is ends up biting them in the rear when cycles turn. And obviously, the longer a cycle goes, the more that's likely to happen. So, Buffett has this saying, which I learned, probably 30 plus years ago. He says, it's only when the tide goes out that you see who's been swimming naked, right? You don't want to be that guy or gal. So that means thinking ahead of time. Like, you have to assume that things will go wrong or there will be a headwind if you're in a tailwind. And then the question is, really think ahead of time, like what will that look like? How will that affect what I'm doing, the decisions I'm making? How much of a reserve have I built up? And most people really don't ask those questions, right?
You said there were two things. Real estate is cyclical is one. What was the second?
Real estate is leveraged. So therefore, if you have an unlevered asset and things are cyclical, your value will fall, but you won't lose the asset. But if you have a levered asset that's cyclical, essentially like you put 20% down and you borrowed 80%, it takes a 20% drop for you to have no value left.
Right.
And then if you're guaranteeing it and you have a 30% drop, now you owe them more than it's worth, right? And you see that all the time. And I mean, look at like our new president Trump has been bankrupt multiple times because of real estate cycles, and there's a bunch of other multi-billionaire real estate guys who ride these cycles up and down.
Right. So let's fast forward here a little bit. I know I asked you this when we had our first consult, but I don't remember, quite frankly. How did you find out about the Harvard Law grad, multiple Ivy League degrees, that has a different foundation of business than a typical investor that is in this group? How did you find out about Collective Genius?
It was completely a series of complete serendipitous things. Now, one of the things is like, I get lucky a lot. I can say that, like with a lot, I could give you a lot of examples. And so the question is like, why do I get lucky so often, right? And I think part of it has to do with that belief, like the positive thinking and the mindset that I learned from that plaque and from my parents. I read a book called Think and Grow Rich because I visualized things going well. So I think that's part of it. But the other part of it is that I am curious and open-minded. I think that's another huge part of it. Like, I think that they're almost like 50-50. So I just sort of like go out there and I follow, like I just pull on threads that I'm interested in and I try things without any preconceived notion that like whether they'll work or not. And so I'll give you the exact thing I remember. So I met a strategic partner in my investment business because we shared office space. And many years, so then a year after I met him, he's like, hey, I have this one need. And I said, yeah, we do that. And so he ended up working with us. And that ended up being a very fruitful partnership. Then he he many years later introduced me to, so this is now 8 years later, he introduces me to a guy who was creating a mastermind for doctors and dentists. Okay. So I meet this guy and he starts inviting me to a couple of events, like locally dinners. Basically, I didn't know what they were, but they were mastermind dinners to recruit for his mastermind. Then he invites me to his mastermind a couple of times. So I go to that. So this is now over another year or two. And then at one of those, at probably the second mastermind that I went, probably the third or fourth event that I went with him in like in the 2 years after I got introduced to him, I meet Nathan Brooks. And Nathan says, hey, you're a real estate guy. There's this real estate group you should know about. So I said, sure. And that led me to the conversation with you. And again, I didn't quite know what it was, but you were like, you just come, it's a real estate group. So I said, okay, and I came to San Diego. And that led me to obviously coming to, and I didn't know what it was. I didn't really know what masterminds were or like whether they're, they're powerful. I knew the word because of Think and Grow Rich when I was 12. So I was like, okay. And then I went, and then again, it was another leap of faith where it was like, people are talking about, because obviously at the time, especially, but even still today, it's a group for wholesalers basically. And to a lesser extent, home flippers. And then there's a smaller group of commercial real estate guys, but that group has grown in the 6 years substantially. CEO is new. So like basically it was only Premier at the time. That was CG was Premier, and it was probably about 140 members, I think, back then. So then I was like in the room, and I'm like listening to all these things, and I'm like, I don't understand like most of it, right? Like I don't know what skip tracing is. I don't know what I don't understand like most of it, but of course I understood that they're buying single family homes and selling them and they're making money doing this at a scale and they have staff and they're, but all the like minutia of stuff, like, right. Like a guy like Fish, who I've gotten to know and who's like very smart, or a Phil Green or Eric Brewer. I'd see these guys on stage. Eric is now a partner, which I came right out of CG. And I'd be like, listening intently to try to understand what was happening or what they're saying. And, when they got into the minutia of like how you fix the leaky buckets or whatever, it just completely, like, I have no idea what I'm talking about. But then the other things like the keynote presentations, 10x is better than 2x, or any number of those things are absolutely 100% relevant to any business. But, ultimately I just took a leap of faith. And why did I take a leap of faith? Because I'm like, the people are good. It was my philosophy, people. I'm like, okay, well, it's a group of great people. Nothing bad can happen if I just spend time with great people. So let me just spend time with great people. And then I was like, oh, let me try it for a year, see what happens. And then I remember like my third or fourth meeting, it was one of the guys said, hey, like the way this works is you join for a year and you start to get to know people, but very little happens. And then the second year you sort of get some green shoots and then like some good stuff starts happening. And so he said that to me and like, I'm like, yeah, that makes sense to me. So I renewed. There's nothing really, other than I was getting value and I enjoyed being around good people. So I renewed, and then like some people started coming to me for investment things that made sense to me. So I did some of those. And then the third year, more of that happened. And then the fourth year, I met Eric, who I didn't know at all, had like literally zero contact with him. And now we have a very fruitful partnership. And you could trace all of that back to sharing office space with that guy like 15 years ago.
Yeah, very lucky, as you said before, but you create your own luck. You took that leap. I can remember it like it was yesterday, the conversation with you. Had we had CEO, then it would have been a perfect group for you. But Premier, or CG at the time, which was just one community, you were not the traditional investor that would typically say yes to a community like this, because you weren't trying to build a team. You weren't trying to increase your deal flow specifically to single family. It didn't necessarily fit, but I knew that you were curious. From the original call, I could tell that you were curious and you were open to learning. It goes back to that blurry picture that you talked about before. You may not have known what skip tracing was, but you knew there were good people, and these were people that understood how to buy an asset at a discount. And all of that started to come together where you said, all right, I'm going to now gather this information to make this picture clearer, and I'm in the room with good people. There may be things that come my way. And you are a testament, my friend, to someone that said, I'm going to take a leap of faith, be around good people, and get to know and have conversations with good people. And more than likely, good things will come my way. I have never had a member that was completely opposite of the normal investor that is our avatar, that came in and has had as much success and given as much as you have. Like, you're an anomaly. I don't think it will be continued in the future as we continue to grow out the CEO group. We have more people like yourself. But you took that leap early on, and obviously it's paid off for you. You mentioned multiple partnerships and investment opportunities.
Yeah.
Outside of those that you've already mentioned, what has CG in general meant to you, these last 5 or 6 years?
It's been great. I mean, like at every level. So let's say that like these partnerships and investments hadn't come from the group, which I mean, I didn't expect any of it to happen, right? It's been a wonderful surprise, because even financially, like obviously like CG is a significant investment in money and time. And so I'm someone, and this is actually something that isn't uncommon. I'm someone that, I'm just going to repeat that. So CG obviously is an investment in money and time for people, including myself. And I am someone that, considers myself careful with money, frugal. Like I was telling Jason, and he was surprised, like I typically don't fly business class. I typically fly economy.
We've had that conversation.
Yeah. And it's just sort of like, I'm always doing the calculus, like, well, sure, I have the money, but like it's a 3-hour flight or a 5-hour flight, and I can pay $500 for economy or $2,000 or $1,500 for business. It's like, well, I don't really need 2 hours or 3 hours of comfort, So yeah, so I didn't, really value those kinds of things. And I've actually started to change on that a little bit. So when I flew to, Argentina, I actually sprang for live flat business. So I kind of surprised myself, but, I did appreciate, I've always appreciated it. So it's not that I don't like nice things. I definitely do. Anyway, so I didn't expect it to pay off in so many financial ways, but it has. But I did expect it, and it would have still paid off or been worth it, just because, like, for example, I decided that I want to 10x my investment firm. And it was, I would say, directly related to seeing Ben Hardy on the CG stage, and promoting his book 10x is easier than 2x. Because here I was thinking I want to 2x my firm at least before I 2x it again. And he's saying, well, it's easier to do 10x. So I'm like, I'm all for easier things. So let's do that, And that's just one of many things. Another thing has been, being in the room with these guys who have created incredible businesses has been inspiring in a lot of ways for me, particularly because they come from a different background. And I'd say there's a lesson in this actually for people like me, or many people like me. And this is a credit to the guys in the room, and it's been something I've learned from. So I would say that on the whole, the average avatar of a CG person isn't the same as the average avatar of the guys that are like went to the Ivy League schools with me, right? By and large, they're not like academically type of, driven. They're not the guys that, like, on average were the top guys in their high school or their college and went on to get degrees and whatever. Yet I would say on average, they're far more successful than the average person who is an Ivy League graduate. So I think that's phenomenal. And I'm like, what do you attribute that to? What I attribute it to, and it's something that I've learned, it's actually rubbed off on me, is to prioritize investing in learning and in communities and in people and in myself. Whereas before I would try to be frugal, but I was being penny wise and pound foolish. And so that I attribute a lot of the success that the guys in CG have had to CG itself, and other things like CG and their constant willingness to invest in masterminds and education and coaching and, people. And that is something that I really have learned and benefited from by being around them, and have tried to then apply in my own business and my own life. That's probably been maybe the greatest value. The inspiration.
So true. The real estate investor that applies and has grown their business to qualify for the collective genius, it's typically the opposite of what you were saying before. Most have that education early and then get into the professional world, where the investor that is the avatar of this group, first of all, is a good human being, as you mentioned before, someone that's willing to share, but also, and they understand the value of sharing, but also maybe didn't have that extensive education, so understands that they don't know what they don't know. And they will probably, more than likely, spend more on the back end than they did up front. Many didn't go to college, or many that did are not doing, what they went to college for. And so they'll spend that extra money because they know there are others out there that understand something at a higher level or are in front of them with some sort of process. And that, you are absolutely 100% correct. And so there's a place for both. There's a place for the person, like, you're the only Harvard grad, or you're the only Ivy League grad. We do have an MIT grad in the group, but there's a place for both.
Not only is there a place for both, they're actually synergistic. That was sort of my point. Like,
yeah,
I think there's at least a certain group of people, and in my case, it wasn't this, but I have seen it where sometimes when you enjoy conventional success, like because you've got degrees or you've got a good job or whatever, you kind of, it's very easy to sort of feel like you've got it figured out. And the reality is that there's always so much to figure out. And even the most humble person can teach you the most valuable lesson. In fact, that's why when I'm in places, I'm always talking to the cab drivers and the servers and everybody. Yeah, it's genuine curiosity. It's not a tactic. But I do learn some amazing things from just talking to whoever's willing to talk to me, So sure, I feel very fortunate that I got to go to Harvard and Columbia and got a world-class education. By the way, the education is not that dissimilar to the education you get at any good school. It's not like you learn different things. I mean, knowledge is knowledge. Sure, the average caliber of the people, because of their selectivity and who they admit, is a little higher. So there's some nice relationships and things that you can learn from other people. But that's true at CG too. But it's just because you have that, why you shouldn't rest on those laurels, in my opinion, but rather then also be a lifelong learner and join communities of people that are interested in the same things, and be open and share and give and receive and all of these things. And that, so it's really in CG that I learned what a really good mastermind is. I've been in other groups, great groups, and they were other types of masterminds. Like Entrepreneurs Organization is one that I've been in for many years before CG. And there's other groups. Any group of a handful of people with a common purpose is a mastermind, according to Think and Grow Rich, which is the definition I read when I was young. But CG, is a particularly really well-run group of people, and the fact that most of them, I know there's a number of people in CG that, and this is where I give them a lot of credit, and I don't think I would have had the courage, but say, when I didn't have money, I was very careful, and I wouldn't spend money on things which I considered, wasteful, that I needed to save it. But there's a bunch of guys that I think, they didn't have money and they borrowed money to invest in their first deal or invest in CG or hire a coach or whatever, and it worked out for them because they're also executors. They followed through on, the coaching or the community or whatever. And I admire that. It's again, when it's easy, now I have money, it's easy for me to do things like CG or whatever. But if I didn't, could I still do it? Right? Would I have the courage to invest ahead of my returns? And that has been a learning. And it's honestly, so I probably should mention this. So I've been so inspired by how great CG is a community, that really pretty much within about after the first year, and I understood how great it was, except I'm not in the business. I'm gee, I wish there was one of these for what I do, asset managers and investors. So actually, very recently, within the last year or so, I have now created a community for people in my field. Of course, none of them know what I'm talking about, so I don't even call it a mastermind. I just call it a community, because I don't want to lose them before jump. But it is, it's a lot of it is modeled after the things I learned in CG that make CG great, except it's just sort of focused on investors like me, professional investors. And it's up and running, and we're starting to, grow it.
Love that. Love hearing there's so much good there. Is there anything right now? CG is all about go-giving, making sure that you're bringing value at all times. Is there anything right now that you're working on, or something that you're implementing, maybe in that community or in your day-to-day business, that is working well for you, that you'd love to share?
Well, definitely the community is one area of focus. So Jason, the founder of CG, has been very helpful to me, and I shared that idea with him probably 5 years ago, and I didn't actually do anything because I was it's hard to start a community. How am I going to do this? So I just sat on it, and like I said, in the last year or so, it has a bunch of things fell into place. I would also call them serendipitous, where it's now real, and we've had a meeting. We're having 3 meetings this year, and it's growing. The group is growing. So obviously, but I give Jason a lot of credit because he helped me understand how do you go from 0 to 1? He gave me that roadmap, and he's been very supportive, as have others in CG. So that's certainly an area of focus. And the reason why I'm so excited about that is I want to create the community that I wanted to be in, and I want to be in, because of the growth that I'm looking to get in my own life and my own business. And obviously I get that in CG too. But this will be a group of my peers doing exactly what I do. So of course it will accelerate things in a different way. So that's definitely one major area of focus. And then the other is of course continuing to grow my firm, Ridgewood Investments, and grow our client base and our assets under management. So that's the other thing. And that's basically helping people manage their investments and grow their money in mostly outside of real estate, especially if somebody's a real estate guy. I'm not going to tell them what to do in real estate. They're already more of an expert probably than I am. But it's things like investing in the markets, investing in their, I'm good with business strategy, and I'm good with investing, and I'm good with a number of other things. And so I act as sort of an advisor or a consigliere to my clients, and I manage the money that they want to grow outside of their core real estate business.
I know your superpower, but I want to make sure that it's what you feel like is your superpower. But to me, your curiosity, and then taking that curiosity and learning that continual knowledge piece of it, to me seems like, from this podcast, this interview, seems like that is where you would land as well. Would you agree with that? That your superpower, and then following up on it?
I think so. I heard this was Isaac Asimov, who's a famous science fiction author. It was like half a joke, but it's something like I related to, and it's a bit immodest, so apologies in advance. But he said, "I'm not a speed reader. I'm a speed understander." And so I do feel like, because of my curiosity and my passion for trying to figure things out, I do often, I can kind of understand things maybe sometimes in certain things, not in other things, because I know if you speak to my wife, she would say that I have Asperger's on a number of different things that are important to her, and probably important as human beings. So like, let's moderate what I'm about to say. But I would say in the things that I'm really passionate about, interested in, like business and investing and some other things, I do feel like I have been able to understand things at a very fundamental level that's unusual, and therefore that has created opportunities for me and my clients. And that's definitely a part of I guess what's given me the ability to have a successful business and to add value to my clients. And so, kind of like a couple of examples of that. One is that, for example, obviously a lot of people are like now paying attention to crypto. I still think a very few percentage of people actually have digital asset exposure. But I read the Bitcoin white paper in 2013, formulated a view on how it fit in, and it's now 11 years later. I did act on it, and I also held on, and that has been a phenomenal investment. I mean, I don't know if anyone listening has ever had an investment that went up 500 to 1. I'm above that right now on my digital asset investments. So you only need like one of those in your life to really move the needle significantly. But I'd say the other area where I've actually been, I think is a superpower, and is kind of related, is there's more and more complexity in life. And so it's harder and harder to sort of figure out like what the signal is from all the noise. And I'd say then that can often lead to sort of confusion and uncertainty and things. And that's an area where I, as a person who my clients have a relationship with, when they have that kind of situation where they're trying to get clarity, but they're facing confusion, I'm often able to be that difference maker, Yeah. And so both of those things are things that I lean into, and I feel like are my superpowers.
So much good there, Ken. Thank you. Is there anything that not many people know about you, that you don't share that often, you share here today?
Well, I did say I'm a complete nerd at heart, but reforming it.
There's more of that.
I mean, I would say that there's so many things. I mean, I think one of the powerful things about a mastermind in CG that I also learned from CG was the power of vulnerability. So I think that there's a lot of different things. I mean, I'm not really a big sports guy, for example, and the sports that I like are like golf and squash and tennis, like the ones that nobody else likes really. So like, like there's a lot of guys that bond in terms of like talking about basketball or football or whatever. Like I'm not one of those guys. So I'll be usually like quietly listening at the bar when everybody else is talking about, big time sports. Of course, I do enjoy going to the odd NFL game or whatever.
Yeah.
But I pretty much like when it comes to NFL games, other than being at a bar and just watching it on TV, I pretty much watch the Super Bowl, maybe a playoff game, and that's about it. And NFL of the major sports is probably my favorite one. So,
but would you and most other Americans, I will say that we do play basketball in the morning in pickleball. I don't think we're going to have a CG squash league anytime soon.
It's really hard. Squash is hard. I'd say the other one, just in the spirit of vulnerability, and something that I deeply believe at my core, and I still work on, is when so I was an immigrant, and when I came to the country, there was a lot I didn't understand, and I have this mind where I'm trying to figure things out deeply, and I've just suddenly been uprooted, and so it was difficult, and I was picked on, obviously partly because I was a nerd, partly probably because I was Indian, and all kinds of things, and dealt with a lot. I'm thankful for it because it made me who I am, and it made me stronger. But there were times during that time when someone showed me unexpected kindness, and I still remember, and I'm 55, and it might have happened when I'm 8 or 10 or 12. So I'd say I really admire people, and I try to be the person myself who shows kindness, especially when it's difficult and no one else is.
Yeah, great words there for sure. Last thing here, a book that you suggest more often than any other.
Yeah, there's so many because I'm always reading a lot. But I would say, let me see. Well, the one that I actually send out books to both clients and some friends. I started this year, but I'm going to start doing it every year. And some of my folks that I know or admire have started to do that. So a book that I can highly recommend, and I have recommended, is a book called Essentialism. I'm going to look up who the author is while we talk, but I read it about 2 or 3 years ago. And it's like a multi-bestseller as far as I know. It's the book that I sent out this year. And yeah, it's called Essentialism, The Disciplined Pursuit of Less. And the author is a guy named Greg McKeown. Excellent book, highly recommended it. And what the basic theme of the book is that is basically less but better. So basically go through things, everything. So it's sort of like apply the Pareto principle, or you guys know the Pareto principle, obviously, the 80-20. There's Pareto squared, which is, I think, 64-4, right? So it's the 20 of the 20. And so the 80-20 principle, the Pareto principle, says 80% of your results or your happiness or whatever comes from 20% of your actions or things like that. Then if you do Pareto on Pareto, you get to 64-4. So actually 64%, more than half of everything, comes from only 4% of your actions and your stuff and your focus and whatever. So essentially the message of essentialism is to go through your life and cut out all this other stuff that isn't essential, that isn't, so that you can have much more time and free up resources for the stuff that really, really counts, right? So that applies to like what you're doing in your business to grow. It applies to like what you're doing in your life, where you spend your time with your family and your personal growth and everything. Like if you take an essentialism approach to everything, I think it just really is like a very powerful idea.
I would totally agree with that statement. That's something that we'll make sure gets in the show notes, and it's something that we focus on a lot. You've heard it over the years, many a time, where people try to go too wide, and we suggest continue to go deeper. And when you're looking at other ideas, it's not easy just to start, and you have to go 0 to 1. But usually it's focusing on less versus more, especially when it comes to going deeper in what their main focus is. So, Ken, this has been great. If people want to reach out to you, I've got your, all your socials and things like that we'll put as a part of this. But is there a best way for people to reach out to you?
Yeah. Well, actually, one thing I want to offer is this is something new I'm doing, but basically to grow the value that we're giving people, just in general across, sort of everything I'm seeing, this trip to Argentina, et cetera, et cetera. I do a lot of travel. I'm going to India soon and going to go to an investment conference there, but I'm also visiting my parents and going to a wedding. So I'm there's a lot I see. I need to share it more. So I'm creating a newsletter that will be going out every 2 weeks to just share like different things that I'm seeing, and it's free. So folks should try to sign up for that if they're interested in just sort of a broad base of investment stuff. RidgewoodInvestments.com is my firm. My email address is ken@ridgewoodinvestments.com. So if folks want to reach out for whatever reason, and I'll send it to you, but there'll probably be a link where you can go and just get the newsletter wherever you want.
Yeah. And we'll make sure that the website is part of the show notes as well. This has been great. I knew it would be. That's why I've been texting you. And with you out of the country, this was the perfect time once you got back. I appreciate you taking the time. I know your time is valuable, but I always enjoy our conversation. So thank you, Ken, for joining us here today.
Thank you. Thanks for the invite. It's been great. And definitely I'm very open to outreach. So if anyone's listening to this and they have anything like questions or anything that I can help with, just to reach out and say hello.
Thank you. And I can attest to that. Ken enjoys conversations. He's a curious individual. And I always have some of my best conversations at our meetings with Ken. So again, thank you. And obviously, if you love to be in a room with members like Ken, we'd love to see if this group is a fit for you. And the best way to do that is go to collectivegenius.com. There you can find our application, fill that application out, and you will talk to myself, Eli, or Jesse, anyone on our team to see if this is a good fit for you, one of our 4 different levels. And again, you can find that at thecollectivegenius.com. And you can also find us on all social media as well as this podcast. We'd love for you to like, subscribe, tell a friend. It's something that we're very passionate about, and we look forward to seeing you every single week. And with that, that is the show for today, and we will see you next week.
Are you ready to scale your real estate business? Visit thecollectivegenius.com, where real estate investors come to scale. Subscribe to the Collective Genius podcast and hit the bell icon to be notified when our next episode releases. And thanks for listening.